Hello and welcome again to this short tutorial on provision, or commonly known as allowance for doubtful debts. We are going to look at a few questions and an example as well. So the first few questions that we are going to discuss in this short tutorial is what is provision for doubtful debts and bad debts. There's a slight difference between the, provision for doubtful debts and bad debts. How do we calculate, or how companies calculate provision for doubtful debts? What is the format, or what is the general entry, not specifically per se the format, what would be the general entry for provision of doubtful debts? And then lastly, we will have a look at example on provision for doubtful debts. So let's begin with what provision for doubtful debts and bad debts is. So allowance, this is also commonly known as allowance for doubtful debts or provision for doubtful debts. It is a contra asset account for accounts receivable, and it records a provision or estimate of uncollectible for accounts receivable. So what it basically means that you have accounts receivable, which are your customers who haven't paid you for their purchase from you. In businesses, it's very normal to expect that some of the customers will not pay you, and hence that is the very reason why we create provision for doubtful debts. Another reason why we create provision for doubtful debts is because of the prudence concept in accounting. That is an accounting principle which tells you that expected losses should be recognized in businesses even if they will not incur. So they are expected. It is an estimate. That is why it is an estimate as well, as their expected losses. It's an expected uncollectible from your accounts receivable. So companies estimate that some percentage of accounts receivable will not be collected from their customers. Whereas a bad debt is an amount which is determined as uncollectible. That is, company will not receive the money from its debtor. So company has determined that from customer X or customer Y or customer Z, you will not receive, or the company will not receive any sort of money from their sale. So that is a bad debt. Whereas allowance is just an estimate. There is still a possibility that you might be able to collect that money from your debtors. Now we are going to look at our next question, that is how to calculate provision for doubtful debts. So companies can calculate provision for doubtful debts in different ways. They come up with estimated provision rate, which is based on their previous experience or past experience of uncollectibles. So companies can learn from their past history of collection rate, and then they would determine the provision rate for provision for doubtful rates. The most common method to calculate such a rate is aging analysis method. This is very common used by companies. And the formula or the calculation to calculate the provision for doubtful debts is you take the gross accounts receivable and then you multiply it by the allowance rate. So that's all about how to calculate provision for doubtful debts. In this question, we are going to look at the general entry for provision for doubtful debts, what companies debit and what companies credit when they are making entry for the allowance or the provision for doubtful debts. So companies would debit the income statement or bad debt expense, because this is an expense, and then credit the allowance or the provision for doubtful debt account. So this is the general entry for allowance. Now we are going to look at an example on provision for doubtful debts, how to calculate provision for doubtful debts, and what would be the entry. This is a multiple choice question, but a very good one. So let's look into the problem. So Rashid maintains a provision for doubtful debts at 5%. So this is our provision rate. This is our provision rate of the trade receivable debtors at end of each year. Trade receivables debtors owed 40,000 on 31st December 2008. Trade receivables or debtors owed 46,000 on 31st December 2009. So these two statements basically mean that in 2008, company had trade receivables of 40,000, and in 2009, company had trade receivables of $46,000. Which entry should Rashid make on 31st December 2009? So this question, this multiple choice, is asking me what would be the entry for provision for doubtful debts on 31st December 2009. In order to do so, the first step would be to calculate the provision for doubtful debts for 2008. So for 2008, provision for doubtful debts would be 40,000, which is the trade debtor here, times the provision rate, that is 5%, and 40,000 times 5% gives me an answer of number of 2,000. So this 2,000 is the provision for 2008, provision for 2008. And in 2008, company would have made an entry of debit income statement, and credit the allowance. So 2,000 debit, 2,000 credit. Debits are always equals to credit, so this entry is done. And this is for 2008. For 2009, you would calculate the provision first. So your trade debtors in 2009 were 46,000. They were 46,000 times the provision rate 5%, and this gives me a number of 2,300 or 2,300. So this is my provision. This is my provision for 2009. So your entry now would be a bit, the number would be different. The entry would still remain the same. So debit income statement, you will debit income statement and credit allowance. But the amount will not be 2,300. The amount will not be 2,300. It would be $300. It would be $300. The reason is because in 2008, you have already recorded a provision of 2,000. Now the new provision is 2,300. So it's only went up by 300. Only went up by $300. So you only record the increment. Only record the increase in provision. That is 300. So in this case, if you look at, since this is a multiple choice question, the answer here would be option A. Now we are going to do a quick recap of this quick tutorial. In this slide, we looked at what provision for doubtful debts are, what is a bad debt expense, and what is the most common way of calculating provision for doubtful debts. So provision for doubtful debts are, it's an estimate on uncollectible debtors. Bad debts are expenses which are determined as uncollectible by the business. So that basically means that business is not expecting their customer to pay them at all. And the most common method to calculate provision for doubtful debts is aging receivable method. Thank you for watching this video. If you find this video helpful, please give it a thumbs up and subscribe to my channel for more videos. Thank you very much.